Hello and welcome to another Simple Trading Ideas trading tutorial. In this Simple Trading Ideas trading tutorial, we're going to continue in our series of using indicators to make trading decisions. So now let's go back to our chart. Here we are back in our chart of the QQQ, the NASDAQ Power Shares QQQ Trust Series 1. And we're looking at our simple trading system that first started off as a simple moving average and then had a risk control measure known as a stop loss added to it. And now we're going to take this a bit further because we were exploring changing the parameters to see how the performance would change. Okay? Now, understanding that this is past data that we're looking at, our objective is to find those types of parameters that have a great likelihood of working well in the future. So those types of parameters might include the type that can also not only get us into good trades and get us into good trends, but those parameters which will allow us to filter some trades that may appear in areas where our trading system isn't the strongest. So we're going to pop back through here for a bit. Okay. All right. And there are periods here. You can see a lot of trades being taken, right? There are periods here. We go back. We do a lot of back and forth, a lot of back and forth. And this is a very short moving average. It's a 2-day moving average in this daily chart. Okay. What you see in areas here, these are traditionally the types of areas where trend following systems such as moving average systems, etc., have difficulty, and that is in periods when the market is consolidating. Okay, so you can see here we're alternating, we sell there, loses money. We go up here, we buy, it loses money. We sell there, loses money. We buy there, make a little. We sell there, loses money. Buy there, loses money. So as you can see, during certain periods, we are essentially out of sync. Our trading system is out of sync with the market. Okay. All right. So what we're going to do is we're going to continue to look at the chart. Always take the opportunity to look at the chart and see where things are happening. You know, where your trading system is doing its best, where your trading system may be faltering, where it's having difficulty. So if we're looking for periods here of consolidation, and a consolidation is basically sideways movement. This is what we're talking about. From here down to here is a trend, and a longer moving average, a longer term moving average would have a lot fewer trades in here. But we're going with what we've seen to be optimized for this particular period of time for our purposes of illustration. And in this case, it was a 2-period moving average with a $2 per share stop in the QQQ. So what we're going to do now is we're going to explore something that's a bit different, and that's going to be using a filter. Okay, something to filter trades. Okay, so we want to filter trades to enhance the performance. This is our objective. We want to be able to increase net profit. We want to be able to minimize drawdown. Okay, so we want to be able to, if we can increase profit and keep our risk the same, that would be good. If we can increase profit and minimize our risk or bring our risk down a bit, that would be good as well. Okay, so there's a lot to be said for the ability to filter trades. Now, what we're going to do to filter trades is we're going to look for a confirmation. Okay, so this is what we're interested in doing. We're looking for confirmation, and for that confirmation, in a trade such as this, say we're short in this particular area, we won't just go short and grab the short right here on the open. We're going to look for confirmation of some sort to give us more confidence that the market is headed downward. So we're looking for a little bit more confirmation of a trend in a downward direction and a little bit more confirmation of a trend in an upward direction. Okay, so let me show you what I have for you. Okay, so here we are, the same chart, but in this chart we've applied a filter, and this is what has happened. We've run the optimization. Now we're using a $2 per share stop loss, and the optimization calls for this particular moving average that was a 2-period, that is now a 16-period moving average, and it also calls for something else that was optimized. These two lines, the red line, which indicates the lowest low of the last 3 bars, and the green line, which represents the highest high of the last 3 bars. So the objective in doing this, as confusing as it looks right now, was to minimize our trading activity in the areas of consolidation. Okay, all right. So as you can see, there were a lot more trades over here in our previous example for more than just the reasons of using the filter, but also the fact that this is a longer term moving average and being a 16 period. Okay, so essentially how this works is the same way with the moving average. Here we are, moving average. Okay, we've closed below the moving average right here. Okay, and this is definitely the lowest low of the last 3 bars, and you can see here we go short. We go short and we stay short, which is excellent in trend following. Now you see down here what happens is we have right here a close that's above the moving average. Okay, and we're also, this is the highest high in the last 3 bars. Okay, so next we buy, and we're along here, and we go along, and then we're below our moving average again. And then let me stretch it out, maybe a bit easier to see, and increase the bar spacing a shade. There we go. Okay, so here we are, and this is first close below our moving average. We go over, and again, that was the lowest low of the last 3 bars. Now this level becomes the lowest low of the last 3 bars. Okay, we've had a close underneath our moving average, and as a result of those two things, we are short. Now, if we had a close that was below the moving average, but we didn't ever break or meet this particular low, we wouldn't be short. So if all our trades were right here close to the moving average, we wouldn't be short at all. Okay, so that's again an example of how the filter works. So we'll move back and take a look at let's see another example real quick. Okay, and let's grab this one. Okay, so here we are. There we go, close above the moving average, and clearly, we're at a new level. It's right at the highest high of the last 3 bars. There's the high, 1, 2, 3, 4. It's the highest high of the last more than 3 actually, but 3 is what we're looking for. And meeting those two parameters above the moving average, the level of the highest high of the last 3 bars, we enter into the trade. Okay. All right. So if it had gone in here, if these bars were lower and didn't meet the criteria of being at or above that particular high, if the price hadn't gone to that level, we would not be long. Okay. So this is, again, this is an example of how this particular type of filter works. And you can use one indicator to filter another. You can use price patterns to filter one another. You can use an indicator to filter a price pattern. In this case, all we're using is a simple moving average and basically kind of like a breakout system, if you will. Okay, a breakout system. So and when I say breakout, it's basically when the price breaks out above the highest high or breaks out below the lowest low of a particular level, then that's known as a breakout. And what it breaks out of is known as the channel. Okay, because, well, it resembles a channel. There's a high on the high end of the channel, there's a low on the low end of the channel. So prices bounce around in between. Basically, markets going nowhere. When it breaks out, then this is an indication that prices may actually go higher. So what we're going to do from here is, let's go inside and let's compare the performance of the systems that we've looked at and see if this methodology is actually bearing any fruit. We could look at a chart and look at the entry and exit points, but until we actually see the actual performance, it's very easy to fool yourself into thinking that a system looks good without looking at the performance. So what we're going to do is we're going to pop into our Excel spreadsheet and compare the performance of these systems. All right, here we are. We are inside of the spreadsheet, and here's our very first system. And this is our profit here, a net profit, profit factor. Okay, and we go down here and we see some important things. Okay, so let's take a look at total net profit. Okay, that's with no stop. There's our total net profit, all trades, right here with a $2 per share stop loss. And in the case of our new system with a channel, we're right at about this same level here that we were in the previous one. So we might be saying, hey, there's no real advantage to it. In fact, it makes less money. But let's pop down here and take a look. Okay, profit factor. The profit factor went up here, and we always like to see the profit factor increase. Okay, we want to see the profit factor look better, and it's certainly done that. Okay, so what else do we want to look at? There's so many different types of metrics here that it's a good idea to go through, and right now we're just going to cover some of the basic ones for you. Okay, here's something else interesting. Okay, the total number of trades. Now, what I do want to do before we continue looking at the performance summary is I would like very much to look at our equity curves again. Okay, that's our first system. Okay, right there, equity curve. That's a drawdown. That's our second system. Okay, and you can see in our first system, okay, we're a little shy of 600 trades, we're in 5. Well, we'll see on the performance summary. In our second system, that's about the same number of trades. Okay, and in our third system, look at our equity curve. Okay, not nearly as many trades, right? Okay, not at all. Okay, but we have some nice equity peaks. And if we look here, our drawdowns don't seem to be as deep, which is another good thing, right? It's another good thing. All right, so let's go back, and we're going to go back to our performance summary. Here we are. Okay, so here are some things to keep in mind. All other things being equal. Let's look at our total number of trades. Total number of trades 557, 543. That's fewer. Total number of trades here is, we're looking at 77 trades. Okay. Now, isn't this interesting? Percent profitable here is 45.96. Well, it's almost 46%, about the same there. Here, the level of profitability is a smaller percentage. Okay. Now, it's a smaller percentage of the trades that were profitable, but here's something interesting to note, and something that's important, especially when you're looking at, well, any system actually. So let's look at this. All right, there we go. Average trade net profit. It's a little bit higher there. Look at the average trade net profit here. Okay. All right, so that's, well, it's not 10 times as much as that, but it's much greater than either of these. Okay. So that's always something that's interesting to look at. Okay. And here's something else to look at. Ratio of the average win to loss, 1.34. Here a little bit better, 2.34. So we're starting to look at some things here. Okay. All right. And these are just, again, just a few of the parameters that it's necessary to look at. Okay, so what we're going to do is we're going to scroll on up here a bit, and this is what we'd like to look at here, is the value of the max drawdown here, 17,750. Here it's a bit less. Let me stretch that out a bit so we can see all those numbers. Here it's a little bit less. And here it's almost half as much as the original. Okay, so that's something else to take into consideration. And an additional thing to take into consideration is the fact that, well, let's just say if you're looking at, say, $9 or $10 a trade, call it 10 for the for the purposes of simplifying things, then this total number of trades is going to be $5,500 subtracted from here, which is going to leave us netting down closer to $20,000. And this one, we're definitely going to be down at $20,000, no doubt. And here at $10, that's only $770 away from there. We're still going to be basically, that would leave us basically still $10,000 ahead of the second system here. So I'll go over that again. Transaction costs are important. Okay? You can look at things trading frequently, things can look good. Then when you take the transaction, when you subtract transaction costs, which are a reality of trading, then things may not look so fantastic. So again, if we take the $5,500, approximately $5,500 out of here, say it was $27,500, that leaves us with approximately $22,000. Okay. And you say in here, I was looking at the wrong number over here. You take it's $5,400 out of here, and then that would leave us with $28,000. And if we go down here, then that leaves us after subtracting the 770. Of course, you could even round it off to 1,000, still leave us with over $31,000. So this one would be a system that I would say would overshadow the other ones that we see here. Okay, as far as its performance is concerned, there's always tons of additional things to look at, and the fact that this one doesn't have very many trades is always something of concern. And here's something additional too, just to get you to think about it. Where is that figure? Ah, here we go. All right. And that's the largest winning trade. In these cases, there and there, it was almost $5,000. Here, it's 14 something. So that's a big number. It's also, for a single trade, it's a pretty sizable percentage. And here's another metric for you: largest winner as a percentage of your total net profit. Okay, and here 2%, 17.82%. It's important to identify the largest winning trade as a percentage of your total net profit, because again, we're looking at past data, and you're going to have to judge your system based upon more what the typical trades might be. But from what we can see of the metrics, the performance summary, and the equity curve, then we're looking at a system here with fewer trades, fewer transaction costs. The only thing we could be really concerned about is that big winning trade, which again, we may not grab a profit that large in the future, but from the looks of the equity curve here, it at least seems steady, even though there are not tons and tons of trades. Okay, so to go back, and what I want to do here is to go back to the total net profit and just make a real quick correction. And the correction was when we were talking about the total number of trades, I referred to this figure as the total net profit for all trades, which it wasn't in this case. So again, initially I was saying that be approximately $5,500 from here, so that would leave us with a net profit of $20,000. That was a mistake, and the smart thing to do when you make a mistake, don't try to hide it, don't try to cover up, admit it, correct it, move forward. That's exactly what I'm doing here. So basically, it'd be that amount, $5,400 from there, leave us with 28. Still, that would mean that overall, after transaction cost, our third adaptation here, our third version of the simple moving average system with a channel breakout filter, would be the system that would be the overall winner. Plus, again, remember this: naturally, there's automation, but a system which trades 77 times in 5 years, that's not very, it's not a ton of trades. Could be pretty easily entered into manually. If you prefer to automate, that's completely up to you. Increased frequency would, of course, mean an increase in the need for automation. And just to let you know, there's nothing wrong with having a system which stays in trades longer, especially when it's moving along with the trend. Okay, and that concludes this Simple Trading Ideas trading tutorial. Thank you for watching. Thank you for taking the time to join us for another Simple Trading Ideas trading tutorial. Please feel free to come to our website at www.simpletradingideas.com for more great trading information. Thank you and have a phenomenal day.